Ghana's Monetary Policy Committee has left its monetary policy unchanged at 14.5%. At the press briefing, Governor of the Bank of Ghana, Ernest Addison, said high-frequency data available to the bank shows some green shoots of rebound in economic activity as consumers seem to be responding to the gradual lifting of restrictions. Courage Kingsley Martey, senior economist at DataBank, joins me for this conversation. Courage, thank you for taking the time out to join us today. Some very positive news coming from the MPC meeting, the three-day MPC meeting. Governor Addison of the Bank of Ghana saying that drivers of economic growth are now returning to normal. But I'd like to hear your own perspective, some of the key takeaways for you from that meeting.
Well, thank you very much for having me. And overall, most of the decisions and the observations were expected. First of all, we expected that the policy rate to be maintained at 14.5% because the upside risk to inflation more or less balances the downside risk to growth. But then there are also some cautious optimism in the data that was published on Friday before the decision was announced today. For instance, the silver lining in all of this has been the currency performance and the external account position so far. It's been a very impressive performance against all odds because we've had the reserves remaining about 4 months of import cover during the period of the pandemic. Despite the collapse in crude oil price, we've had gold maintaining a strong performance, 5.5% extra growth year on year. Cocoa receipts has also been over 14% year-on-year increase, and that has mitigated partly the shortfall in oil receipts. So that's good. And then on growth front, it's also heartwarming to note that after the easing of restrictions, we are beginning to see signs of improvement in economic activity. Another heartwarming information is that despite the contraction in the second quarter as a result of the lockdowns, the contraction was not as initially feared because initially the authorities had expected 5.7% contraction, but it turned out to be 3.2%. And based on the development in the composite index of economic activity, there are signs that we should bounce back to positive growth as early as quarter 3, latest quarter 4, albeit very moderate growth.
I'd like to quickly talk about the fiscal side of things. Budget deficit, according to Mr. Addison, the budget deficit still at 7.4% of GDP. And he cites that, this is one of the fallout of the COVID-19 impact on fiscal operations. Is this something that should be of concern, or do you think that the fiscal authorities can have this under control sooner than later?
Well, it is very much a concern, especially in the short term, because if you look at the numbers again, 7.4% overall budget deficit is more than 2 times the deficit at the same point last year. Now, a primary deficit of 3.7% is more than 3 times the level it was at the same period last year. Now, all these indicators, the fiscal indicators, also are slightly worse than the revised target that was announced in the mid-year budget review. So it gives reason to be concerned, especially in the short term. And that is translating into a higher rate of growth in the debt portfolio. And so beyond 2020 and probably 2021 or 2022, there is a need to fashion out some domestic fiscal adjustment program. Otherwise, we are at a risk of high debt distress, which will not be good for borrowing costs, both in the domestic market and in the external markets.
Okay, let's move on to consumer confidence levels now at pre-lockdown levels. Okay, I think we've talked about that. Let's quickly just talk about inflation. According to Addison, inflation expected to return to medium-term target by Q2 of 2021. I'm just wondering, overall, with inflation, with the key indicators from the manufacturing services, does all these data that has come through from the MPC meeting, does this call for a change, in your opinion, a change of strategy especially for the fiscal and monetary authorities? Or do you think that Ghana will stay the course in terms of the pre-COVID-19 plan that was already in place in terms of how to move the economy forward?
Well, inflation is the big one. Beside the fiscal concerns, inflation is the next short-term concern that we have. is there a need for a change in strategy as far as the monetary authorities are concerned? I don't think so. I think they've done quite a lot to be able to ensure that whilst they tilt to support growth recovery, they do not lose grip on the inflation outlook, particularly over the medium term. So what it appears to be is that for now, they are prepared to sacrifice some level of price stability in the short term, because if you look at their forecast, they believe that inflation will return to the target band of 6 to 10% by the second quarter of next year, which means that from now till then, we expect inflation to remain in the upper band. And that is a consequence of the heavy liquidity injection to ensure that we revive growth, we revive demand. And once growth has sufficiently recovered, we should see the return to price stability mandate as far as the central bank is concerned. So